let's get into the individual stocks and Johnson & Johnson. This is one we hold in our US portfolio.
Yeah, I feel bad about talking about it all the time, and maybe in due course we'll have another show where we talk about some other interesting US pharma stocks, but we haven't talked about it for a while and we own it. So
I think that's a valid
Fair
reason
enough.
to talk about it today. It is the world's largest healthcare, one of the world's largest healthcare companies, with divisions focused on pharmaceuticals, medical devices, and consumer healthcare products. And this is the trend that you see in a lot of the pharma companies, the diversification into those three elements specifically.
indeed, and this one is a big one, $307.7 billion.
Price to earnings ratio of 19.3 and a dividend yield here of 2.8%. Can you go wrong by having Johnson & Johnson in your portfolio?
So Johnson & Johnson is probably one of the nicest stocks in the sector to own in your portfolio if you're looking for US exposure and multinational exposure for that matter, because they have a really solid pharmaceutical pipeline, one of the best in the business, complemented by the medical devices business, which is also just a consistent revenue generator for the company, and where they have a lot of specialist knowledge. And then consumer products, where everyone knows Johnson & Johnson's baby, everyone knows Listerine, Band-Aid. These are just some of the worldwide brands that Johnson & Johnson owns. So if you're going to pick one, this would probably be the one you'd pick.
So let's have a look at the share price performance, Paul. And
Yeah, it's done nicely. So it did very well through that period where things were looking good and the prices were rising for some of the stuff that they make, like Remicade and Risperdal and Zytiga and so on. They've got drugs for all sorts of conditions. Inflammation is a major one. That's people that have got arthritis. And then all the associated conditions, causes. It had that sort of fall off in the middle of 2016 when both Hillary Clinton and Donald Trump started making comments. Remember, the US market is the biggest by far. That's where medical spending is the most, and that's where these companies are able to price their drugs at very elevated levels. So that's key. Now, I'm not quite sure where we are. You know, Trump is making all sorts of contradictory noises.
Trump is meddling everywhere, so I think he's going to...
He's firing off shots. He's turning over tables. No one quite knows what next.
Chantal, you got an opinion on this?
Yeah, I mean, the thing is, markets don't like uncertainty, and Donald Trump is being a little bit erratic in his erratic, abrasive in the way that he's approaching this industry. But it does also result in it has also resulted in a little bit of a derating in the pharmaceutical industry in the US in particular. So it might just be an opportunity for investors who aren't invested in the sector to get involved.
There's news out that's relevant for this company too. Remember, these multinationals make a lot of money internationally outside of America, selling their drugs there, right, and all over the place. They are buying a Swiss company called Actelion for $30 billion, which will give them a portfolio of pulmonary drugs which are used to calm your heart down and to reduce your problems associated with high blood pressure. So that's an interesting deal. The drug's called Tracleer.
How big is the deal again?
$30 billion.
$30 billion.
So it represents about 10% of Johnson & Johnson's aggregate market cap. And the view generally, I think, is sort of tentatively positive because it'll add more upside and they can market the drugs and, you know, streamline the distribution
Well, let's
process.
take that thought that Chantal put on the table a little bit further, that this could be a buying opportunity given the re-rating of the pharmaceutical sector downwards in the current uncertain landscape. Hot or not on Johnson & Johnson specifically?
So, I mean, on a forward PE basis, it doesn't look expensive at all. So, and the growth trajectory is still pretty solid, even though it's low, but that is US pharmaceuticals. You're never going to get earnings growth more than 6 or 7%, or maybe get a spike of 11 or 12%. But this is a solid company, defensive. It's
You're
a
hot on this. Paul?
Yep, I think it's a definite add for people if particularly you've got limited funds offshore, so you want to get into healthcare, consumer and also medical devices. It's a one-stop shop for all of that, and in time we'll see it either grow and or split up or reorganize itself.
You just need to be
definitely.
patient.